Joining us now, IBM Vice Chair Gary Cohn. He served as director of the National Economic Council in President Trump's first term. Good to have you on.
Great to be here, Joe.
I don't know where to start on this, Gary.
And back in, Andrew. It's great to be with all of you.
Great to
be with all of you. You know, just complimenting Andrew on his book. I told him he needed a little more publicity. We didn't really know. We didn't really know it was out there.
Wait a minute. Your book is out?
Not yet. No, I'm joking.
You were in the first Trump administration, and I guess it was widely talked about that if you agree with 70% of something, you don't want to sacrifice the perfect for the good. You had some issues, I think, and maybe in the second administration you're not part of it, but you're not necessarily a tariff guy or some of the things. But are you a little bit surprised that as well as things are going, how divided everybody is? I'm shocked. I mean, the border's closed, the market's at new highs, we're getting these trade deals, the GDP looks good, unemployment's still low, inflation is... You know, I don't know.
Benefits are about to end. Government workers aren't getting paid.
Soybean
farmers are up in arms.
That's not Trump. None of that.
I can just let the two of you talk. This is perfect.
None of that is Trump. It's the other. It's the side. In fact, it's resisting
Buck
Trump.
Stops here.
No.
Buck stops here. You got to look. I understand that. I hate what the Democrats are doing here. But ultimately, the government's been closed for a month, and somebody's got to figure this out and open it. Somebody's got to step in and be the leader on this. Sorry, Gary, back over to you.
That's a manifestation of what I'm saying about their whole resist mentality. That's why the government's shut down, because he's doing too well as we are.
I think you look at this in many ways as things are going well. But we're in this, many people call it this K-shaped economy, right? We've got one leg going up and one leg going down.
When has that not been true, that there's the high-end consumer and the low-end consumer?
It's always been true. Is
it worse?
I just think it's bigger and more divided today than it has been in a very long time. Between people that are doing well and have enormous amount of disposable income and are willing to spend money no matter what's going on in the economy. And then there's those, as Becky and you were just talking about, those that literally work for the government today who are probably standing in line potentially at food banks to be able to put food on their tables. The dichotomy between the two of those is as wide as has ever been. Now, look, the government going back to work will help some of that. And there's a very interesting but strange phenomena when you're a government that shuts down for 4 weeks and you don't pay your workers. The workers tend to cut back and they tend to make do over those 4 weeks. Then they get the 4 weeks of pay back, and then they go out and spend it. So it's in a funny but true way, it ends up being stimulant for the economy. So when those workers get their 4 weeks of back pay, they'll put it into the economy, and it will feel good during those periods of times. As you point out, if you look at overall corporate earnings, they continue to be very strong. But when you look at how corporates are getting there, it's also interesting. We've seen probably more layoffs in this round of corporate earnings than we've seen in a long period of time. Over the last week and a half, 2 weeks, you've seen well over 160,000.
Yeah, why is that?
Well, I think it's a combination. But the 160,000, if you put it in relationship to the conversation you were having with Steve Leisman yesterday morning, where you were talking about, the private payroll data looks like about 15,000 jobs a week. Yeah. Well, 160,000 is 15,000. That's at least 10 weeks. We've laid out 10 weeks of people in the last few weeks.
Wow.
You go down the list, UPS is top of the list at close to 50,000. That's purely a function of less foreign imports, and less freight. So they're telling you this has to do with trade. You're looking at Nestle. Nestle is in here at 16,000. Price of chocolate is really high, and consumers are buying less chocolate. So the overall thought here, and we talked about this last time I was here, input prices are going up for U.S. companies. The cost of labor is not going down, and the price that they can charge the ultimate consumer is not going up. The only way to make your quarterly numbers work is to squeeze some cost out. And it feels like the cost that people are squeezing out right now is labor cost. And I said it to you guys about a month ago, and I think it's proving true in these numbers. We've seen 160, 170,000 layoffs in the quarter.
Policy question for you. Either you're Jay Powell or you're President Trump. What do you do to fix that problem?
This is a tough problem, but I do think they're working towards fixing it slowly and surely. Getting a deal done with China, getting a deal done with Japan, getting a deal done with Canada, those are all very helpful. Once you figure out where the final cost of goods is, or the final input costs. And these rare earths and a bunch of these commodity inputs, which is, Japan, China, Canada, once you settle the price of those input costs down, I think manufacturers have a much better idea of what they can charge and what labor they can have. And right now, we're pushing labor out of the equation. And look, there's a bit of an AI reality in there, and there's a huge AI excuse.
You know how many times stocks have gone up when companies announce rationalization of operations or layoffs or whatever you want to call it. It used to happen all the time. You said, how do we fix this? Is this something that corporations have needed to do in pairing unproductive parts of their business? Is this actually a net positive long term that this tariff cover is giving them reason to lay off people? It's a bad thing, but
no,
they're going to be leaner and meaner.
It's the natural cycle. It's the natural cycle.
Not for the people that are losing their jobs.
Exactly right. If you're one of those people that's in the cycle, it doesn't feel very natural. It doesn't feel very fair. But if you think of the cycle we've had, and sort of starts with the COVID cycle, we had the exact opposite. Every company was hoarding workers. Everyone who came in and said, look, I can't hire good people. I can't get good people. Anyone I get, I'm retaining, I'm attracting. We came out of COVID with workers at an all-time record high in companies. Companies were hoarding workers, and they weren't going to let them go at any cost because, heaven forbid, they should need that incremental person. They couldn't get them back. We've gone from hoarding workers at the end of COVID, and now, 3 or 4 years later, we're to the point where we're going in the corporate world. We're going from hoarding workers to we're going to let's see how efficiently we can run. Let's have one less marginal worker than we need, with the understanding that the environment is that I can hire back a marginal worker tomorrow if I really need them.
It's not AI yet.
There's a little bit of AI.
But by the way,
look, I'm not going to say AI is not part of this equation. It's a little bit of AI, but a lot of this is traditional workers. So, 50,000 workers at United Parcel Service, that's not AI. That's volume going through UPS.
In terms of the AI piece, so when do you think that there's a tipping point for that?
I don't think there's a tipping point. I think there's an evolution.
Okay.
I think you're going to see companies continue to embrace AI, continually figure out how to create a company-wide enterprise solution that creates real synergistic cost savings outcomes. And as that happens, you will start to see companies, I don't know if they will necessarily get smaller,
right,
but they will definitely move people out of certain tasks that people hate to do.
How fast is the evolution, and how painful
are
we talking like watching the Wolfman?
We're in it now. We're in it now. We're in the beginnings of the evolution now.
But is it
in the world of writing code? Yeah. The skill and uniqueness of writing code is going to become an obsolete skill in our near-term future here. The code assist programs are so good at writing code that instead of hiring thousands of the best engineers, you're going to hire hundreds of the best engineers and give them AI tools to help them build it. In the world of HR, the HR tools today and AI are so good that no one's ever building these huge AI departments and say, well, for every 10 or 12 or 15 employees we hire, we have to hire another HR person. You don't. The HR bot's going to be able to take care of 95% of what that person needs. So there's going to be huge opportunity there. We're seeing that. We're seeing it. And those are what I would consider sort of operations, enterprises. They're making companies more efficient. We haven't gotten AI to sort of being the revenue producer. We've got it to be the cost center savings. I think AI, as we move down this field, and we're heading really quickly into the quantum space, when we get into the quantum space, AI will go from the cost saver to the revenue creator.